Hello, hello. I'm Shelley Fulcher-Kuntz. I'm an attorney at the firm of Hansen St, and I'm here to talk to you today about crisis coverage and claims, the three big C's. Let me tell you a little bit about myself. I've been practicing law since 2001. The bulk of my practice when I first started out was doing personal injury work and workers' compensation. And I've since expanded that practice to also include family law and estate planning. So I joke that I just kind of clean up people's messes for a living. But what I want to talk to you guys about today is crisis coverage and claims. Now, crisis is something that unfortunately is becoming a normal for us. There's been lots of crisis in the last several months. That we, as a nation and all that are experiencing, but I'm talking about the crisis that can befall you in your everyday lives, things that come up you don't expect. And this has to do with a crisis that would result in an insurance claim. Like let's say a personal injury claim, you get in a rear end fender bender, out on the road someplace, or somebody gets hurt at your house, or you get hurt at somebody's house or on somebody's property or business. Okay, that's the crisis. And when those things happen, it's scary. It creates uncertainty. You might be hurt. You don't know what to do. You don't know where to turn. And my whole point of this webinar is to have you protected before crisis ever comes. Because there's the thing, crisis always shows up at some point. I mean, we're living in an age now where crisis is really becoming normal. So you might as well be protected. You might as well know what to do. And that'll at least create some certainty in these uncertain times. So let's talk a little bit about coverage. And you're like, oh, I got to listen to insurance coverage. Well, when I first started doing personal injury law, I started giving my clients this little sort of insurance seminar talking to them about their coverage, because I would always look to see what kind of insurance coverage did they have coming into this claim so we could make sure things were taken care of for them while their claim was pending. Okay. And what I found is a lot of my clients didn't understand what coverage they had. They didn't understand what they were paying for. And oftentimes they weren't investing in that coverage in the places they really needed to. Okay. And they had a very common mindset about insurance coverage. So I'm going to give you some tips and tricks that if you're going to spend the money, you might as well spend it wisely and make sure you're protected. Okay. So when it comes to, let's talk about automobile coverage or homeowners coverage, most people, when they go to shop for that, the first thing they think of, well, how cheap can I get it? How cheap can I get it? Because it's expensive, right? Well, the first type of coverage is it's the most expensive portion that you pay for. When you get what's called a declaration sheet when you buy auto insurance, and it breaks it out and shows what is my premium covering, okay? And the premium covers all the coverages you opted to buy and shows you all the coverages you opted out of. So I'm going to tell you what's really good to invest in and what are the things that maybe you need or don't need. We're going to talk about liability coverage. Liability coverage is what people typically look at when they're looking for insurance coverage. But here's the thing, liability coverage protects other people from you. So if you're out driving around on the road and you hit somebody and you hurt them, the liability portion of your coverage, this right here, is what's going to pay that person's claim. Okay, and that's the most expensive part of your premium. And by law, you are required to have liability coverage. Okay, and so in Idaho, the minimum limits is $25,000. And the question is that enough? Is that enough? Okay, it may or may not be, but generally 25,000 is pretty low. And so the thing you need to be thinking about when you buy coverage is if you're only buying those minimum limits because you're trying to get the cheapest rate possible, you may be unprotected. If you hit somebody and hurt them and they had a family in the car, 25,000 may not be enough to take care of their expenses, and they might try to come after you personally. Okay. So you want to make sure that you've got enough, but the liability portion is the most expensive part of your coverage. And that's what most people are looking at when they shop for insurance. But remember, that only protects other people from you. Where people come up short, and it's because they typically don't know, is the protections that you can buy to protect yourself from everybody else. Okay. The first one is MedPay, or medical payment coverage. This protects you from other people, okay? And medical payment coverage is what's called a no-fault policy. That means whether it's your fault or somebody else's, that just pays out, okay? And what I tell people, and it's same with homeowner policies. Homeowner policies also have what's called medical payment coverage. And medical payment coverage pays medical bills up front. And you say, well, I've got health insurance. Sure, you might have health insurance, but you might have a deductible, you might have a copay, and both of those might be really high. The nice thing about MedPay, there is no copay, there is no deductible, it just pays. So it's a good interim payer to keep bills out of collections, protect your credit rating and all of that. And I tell clients, buy the most your company writes, or at least the most you can afford, because it's cheap. It's cheap. I have $100,000 with my carrier and I pay less than $100 a year for it. $100,000, that's enough to get you in and out of the emergency room, potentially a surgery, some long-term physical therapy. It's generally enough, okay? So MedPay is an investment in yourself. I always tell clients, the car can be fixed or totaled, but you can't. You can't, okay? So you wanna make sure you've got MedPay, and don't get like $1,000. $1,000 is not gonna get you out of the emergency room these days. So if you're gonna spend the money, invest in yourself, because that's what you're doing. You're insuring yourself in the vehicle. Now, when it comes to your homeowner's homeowners policies generally write smaller amounts, 1,000 to 5,000 approximately, but still buy the most they offer because it's cheap, but it pays off huge if you have it when you need it. That MedPay coverage, that's going to cover you. Most policies, you always want to read the policy and make sure that you know what's covered. And if you don't know how to read the policy, you can pay an attorney to do it. Or you can sit down with your insurance agent and say, make sure I really understand this. But most of the time, MedPay is going to cover you if you're on a bicycle and you get hit by a car. If you're a pedestrian, say in a crosswalk, and you get hit, hopefully not, but if you did. If you have multiple people in the car with you, whatever amount of MedPay you've bought, there's that amount for each person in the vehicle. So if you have kids, you can't afford to have you can't not afford to have MedPay. You need to have MedPay all the time. Why? It's no fault. It pays out whether you caused the wreck, someone else caused the wreck, and it creates peace of mind. Okay, so that's MedPay. The next type of coverage is what we call uninsured motorist coverage, or UM. And that's when you get hit, unfortunately, by the guy that doesn't have any insurance. You're not doing anything, you're sitting at the street light, you're sitting at the red light, and boom, you get rear-ended, and the person behind you has no insurance, and you're hurt, okay? So if person has no insurance, you better hope that you've got something to make up the difference, because otherwise you're stuck, okay? And UM coverage, uninsured motorist, it's cheap, and it protects you from everybody else out there that didn't have insurance, okay? And typically those coverages, they are written on a per person, per accident basis, which means if you had, let's say, 100,000 per person or 300,000 per accident, that's a pretty common coverage type for most carriers. What that means is if you got hit by an uninsured motorist, the most your company is going to pay out to any one person is $100,000. The most that company is going to pay out per accident is $300,000, which means if you had 4 people in the car, you've got a total of $300,000 for those 4 people to divide up in some fashion based on their medical expenses, their injuries, and that type of thing. That's uninsured motorist coverage. I will tell you the majority of clients that I have worked with either had none of that because they didn't know, or they just had $25,000, which is the minimum limits in Idaho. And granted, it is better than having none, but if you only have $25,000 and let's say you need a back surgery, that's not going to cut it. It's not going to pay for it all. Okay, so that's the other thing. Buy as much of that as you can afford. It's cheap. It's super cheap. It's so cheap you'd think that they made a mistake on your declaration sheet. You're like, I'm only paying this. I have $500,000 of uninsured motorist coverage, and I pay less than $50 a year to have it. And hopefully I'm never going to need it. But for a $50 a year investment to get 500, it's worth it to me. Now, the other type of coverage that protects you from other people is underinsured motorist coverage. We call that UIM. And that means you get hit by the guy that doesn't have enough. Maybe that person only has these minimum liability limits of $25,000. And maybe you unfortunately get hurt badly in this wreck and you need a shoulder surgery and a knee surgery. And his $25,000 is not going to cover it. Okay, so then what happens? Well, you would try to get everything that underinsured motorist had, and then you turn to your own company and say, hey, this person didn't have enough. I need to tap into my underinsured motorist coverage. Okay, and it's typically written the same way as your uninsured on a per person per accident basis, or you can do a minimum limits. Now, with many companies, many insurance companies out there, if you have underinsured motorist coverage, and it really shouldn't be an if, you should automatically have it for the same reasons you would have uninsured, they typically will get an offset. And you're like, what do you mean by offset? An offset would be, let's say you get hit by the guy with 25,000 and you have 100,000 on your policy and your bills are cresting 80 grand. Okay, if you get the guilty guy's 25,000, your company, depending on who you have, if they have an offset, they're going to say, okay, we're going to subtract the 25 you got from the guilty person from the coverage available to you, and then that's what you have left. So 100, if you had 100 minus his 25, that's going to give you an additional 75,000 to make a claim against. There are a couple of companies that don't have those offsets. So if you had 100 and the other person had 25, you would have a total of 125 to make a claim against if you had serious injuries. So again, the coverages that protect you from other people are MedPay, uninsured motorist, and underinsured motorist. And I guarantee you the premiums for those three coverages that protect you are generally less than what you're paying for your liability. So again, you need to think of yourself again, the car can be fixed or totaled, but you can't. You can't. And so think of when you go to pay auto insurance, you are paying to insure yourself in the car and your family in the car and your passengers in the car. That's really what you're paying for. Now, obviously, there's other coverages that cover repair of the vehicle and all of that. But again, the vehicle, at the end of the day, you're more important than the vehicle. So invest the money in you to make sure you're protected. All right, so that's your coverage. Okay, now if we go to claims. So let's say you've gotten hurt in a car wreck, okay? It gets confusing on who pays what, when do they pay? Most people automatically think, well, the guilty person's insurance needs to pay all this. So that's the information you give to all your healthcare providers. And then all of a sudden the bills aren't getting paid. They're going to collections. And you're like, what's going on? I wasn't doing anything wrong. I was sitting at this stoplight and I got rear-ended. This is where coming and talking to an attorney or just knowing some things right out of the gate can maximize your claim and protect your credit. So the analogy I always give clients is picture a pig at a trough. You know, big feeding trough, and you know how the little piggies line up to eat? So payments have an order in a personal injury claim. Your first pig at the trough is what we call the first party. The first party. And the first party is your MedPay coverage. Remember, we talked about having that MedPay coverage because it pays out quickly. You don't have to worry about deductibles. You don't have to worry about co-pays. It just pays, okay? So you would use all of that up. So if you had 10,000 in MedPay or 25,000 in MedPay, your MedPay is going to continue to pay your bills till that coverage runs out. That pot of money is depleted down to nothing. Once that happens, if you still have medical bills, then we move down to what's called the secondary payer, which is your health insurance. But health insurers require that your MedPay, or that first party, the first pig at that trough, gets used up first. So normally you would contact your carrier and say, hey, I need you to send me proof that I've used up all my MedPay, and they do that, and you send that to your health insurer, and then your health insurer starts to pay those medical bills. But here's the kicker. The third party is the at fault or the guilty party, and they always pay last. You're like, why? Because they don't pay until you're ready to settle your claim. They don't, that's just how it works, okay? That's how it works. So the payment order, again, is MedPay coverage, your own MedPay coverage. When you use that up, then your health insurance you would have kick in and it would pay. And at the very end, the guilty party pays. And then whatever that amount you either settle with for or you receive out of a jury verdict, you have to go back to your health insurer and your MedPay and reimburse them. They're kind of like your MedPay and your health insurance. They're kind of like your rich next door neighbors. They're going to pay the bills in the interim till you get things worked out with the at fault party. And then once you do and they pay, then you have to reimburse health insurance and your MedPay. That's in your insurance contract. It's in all of the insurance contract. That concept is called subrogation. Okay, so your payment order is really important to make sure bills are not going to collection, because at the end of the day, you are responsible for your medical payments. Okay, you're responsible for your medical payments. All right, and because that's a deal between you and your medical providers. So it doesn't make any difference to the doctor whose fault it was while you're there for treatment. They just want to get paid. And so you have to make sure they get paid. And if you have your payment order set up correctly, you will do it right and it'll be a lot less stressful. Okay. So now, as a person with a potential personal injury claim, being a compliant client maximizes the value of your claim. And when I say compliant, what that means is you are creating evidence through your personal injury claim. You want to make it really easy for the insurance adjuster to resolve your claim for you. Realize that the medical treatment was necessary and reasonable, that the injuries that you sustained were really from the wreck and not some other source. You want to make it really easy for them to pay you. So one thing you can do is attend your medical appointments. And you say, well, duh. But I mean, if you're not, like let's say you're just no-showing. You're supposed to go to physical therapy and it's not really convenient for your schedule and you no-show a couple of times. Well, what gets written down in the records is a no-show. A no-show to the insurance industry translates to I'm not hurt or I don't care. So if you can't make it to an appointment, always call the medical provider and say, hey, I can't make it, I'm sick, or there's an issue, I'm just calling to let you know, I'll plan to be there to the next one. And then that's what actually gets put in the record. Client called in sick, patient called in sick. Okay, that's different than a no-show. A no-show translates to I don't care, which you might as well picture stacks of $100 bills flying away like a flock of geese, because that's what that'll translate to. So you want to be medically compliant. You want to go to your medical appointments and finish up your course of treatment with your provider if that's appropriate. Sometimes you have to change providers or change treatment mid-scope depending on how you're healing up. And whatever your doctor's recommending, follow it. Because if you're not following what they're doing, that gets in your medical records and that can be damaging to your claim. All right, so you want to finish your medical treatment strong. Okay, and then you may want to come and talk to an attorney. A lot of people come and see an attorney right out of the gate. And I like it when people do that because I can at least set them up to maximize the claim going forward, whether I represent them or not, just to give them a little education. And that's part of the reason for me doing this webinar today is so before ever talking to an attorney, these are things you can do at the outset to make the most of the claim. Okay, and the first one, like we said, is protecting yourself with insurance coverage. But you may say, well, gosh, do I need to talk to an attorney? Most attorneys on a personal injury claim or a homeowner's claim, the majority of us are going to do a free consultation. Okay, and so you can come in and talk to somebody and all of that. Sometimes I have clients come in and I take a look at everything and I realize, you're going to do better without me. Because it's a small claim, you might have very minor injuries, a little bit of treatment, low medical bills overall, pretty straight up facts, and you really don't need an attorney. And I would say that the majority of attorneys, if you don't need one, they're going to tell you what to do. That's what I would do. I would just say, look, do this, 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 and this, and you should be good. You always have the option to retain an attorney, but you may not need one. Okay, but if you're hurt, you're looking at surgery, things like that, it gets complicated. It can turn into a part-time job trying to manage all the medical bills, making sure the right parties are paying them, and it's stressful, and you're trying to heal on top of it. So sometimes having an attorney take that claim over and just manage it for you reduces a lot of stress, okay? And in these days of crisis, we all want as little crisis as possible, but you can set yourself up to protect yourself and make the crisis a lot easier to weather by doing some of these things at the outset. So check your insurance coverage, pull your homeowners, your auto coverage, if you have a motorcycle, any of those coverages, and take a look. If you don't understand them and don't know how to read them, call your agent. If you notice something's missing, like oftentimes underinsured motorist coverage is missing, call up and say, how come I don't have any of this? And if they try and, if they say, oh, well, and try and talk you out of it, say, I need some and I want a bunch. And I'm not trying to sell you insurance today, but I've had to have a number of very sad conversations with clients that didn't have these coverages, and me having to say, there's only this much that we can do. There's only this much coverage. This person that hit you is probably judgment proof. Maybe it's a person in their early 20s or a teenager, somebody that doesn't have any assets. And the only thing they have is this little bit of liability coverage, and you don't have anything else to make up their deficit. And that's a really sad and hard conversation, which is why I wanted to do this webinar. So invest in yourself. Invest in yourself when you're driving, invest in yourself when you're in someone else's car. Your insurance, auto insurance coverage is typically going to cover you in someone else's vehicle. Make sure, check with your agent, but 9 times out of 10 it will, okay? So that is your little crisis coverage and claims webinar for the day. If you have any questions, you can always contact me at Hansen Johnson. That number is 208-888-9980. I am Shelley Fulcher-Kuntz, and I am happy to talk to you. And thank you very much for letting me bring this to you. Bye.